This one's good, guys. I really want to talk about this one. How to avoid stop loss when institutional trading. Now, one thing that I really want you to understand is that yes, a lot of us want to be perfecting the entry. However, what we should really focus on is perfecting the exit. Because at the end of the day, you really want to know, what is it that's leaving you money? Is it the entry that's leaving you money, or is it the exit that's leaving you money? At the end of the day, it's the exit that's leaving you the money. So with that being said, let's go into the charts real quick and see what it is that I mean by this. So this was an actual trade that we went ahead and sent out this week on the levels group. Now, many of us would have gone ahead and done this. We went ahead and entered right here. Great entry, everything phenomenal, perfect, love it. However, what would have happened if market spiked a little bit to the upside? We do have a great entry. However, even though we have a great entry, that doesn't mean that you need to be stingy on your stop loss, right? That doesn't mean that you have to do it right here, okay? One of the common mistakes that a lot of institutional traders do is that they want to perfect their entry as much as also they want to perfect their stop loss. Remember that your stop loss should be, at least a lot of people go ahead and do, is they go ahead and just put it right above the previous high. Understand that there's still orders over here. So if there's still orders over there that could potentially be taken out, the only reason that we're entering over here is because there's a discount in orders. But to fully fulfill all the orders that were placed, that's at the very tip of the market, guys. So that's at the very tip of where the order flow either started or ended. In this case scenario, market could still continue on going up all the way over here and still be valid, and then from there move down. But what would have happened if it did that? Well, you would have been spiked out and you would have lost. So it's very important for you to do this, and trust me, this will help you so much. Just move your stop loss. Move your stop loss 2 to 3 pips above. So if your stop loss was, let's say 7, go for 10 pips. It's okay. You can go ahead and move your stop loss a little bit, 10, 12 pips. At the end of the day, you know that you have a great entry and you're not being stingy with your stop loss. Because one thing that I really want you to know that's going to help you 100% is going to be your exits, guys. There's a difference between a person that goes ahead and takes the trade, being okay with his stop loss being 10, 15 pips and not being hit, then the difference with another person that goes ahead and has a stop loss of 5 pips, but his stop loss was hit by a pip. Literally, their stop loss was hit because they could have gone ahead and put an extra pip to the upside, so it wouldn't have been hit, but they were stingy with their stop loss. So at the end of the day, you don't want to be stingy with your stop loss. Let's do another example over here, guys. For example, in this case scenario, we would have been having a great entry, great everything, perfect, right? Now, many of us would have done this. Would have gone ahead and put stop loss right there, take profits over here. Nice risk to reward ratio where we can see almost a 1-to-4 risk to reward ratio. Put your stop loss 2 pips above. 2 pips above can do a huge difference. It can go ahead and help you in case if there's any type of manipulation in the market where it can potentially spike you out. There could be some type of news or just orders that were not fulfilled, and market goes up and fulfills those orders and then continues moving down. I really want to show you guys an example like this over here. For example, let's say in this case scenario, you would have been stopped out. This is a great example for market potential coming down, knowing that market could come down and fulfill the area of imbalance. So you know where to look into. You know that you're going to be looking for this imbalance zone. However, your entry, okay? There's a difference between the person that went ahead and put their stop loss right here, right above those highs, which was a 7 pip stop loss, and their TP over here, almost a 1-to-4 risk to reward ratio. Okay, this person lost because he went ahead and put their stop loss really tight. But what if instead of having it 7, you would have gone ahead and just done it, a little bit more, just 10 pips, sometimes even 12 pips, like I mentioned. You would have still had a pretty good risk to reward ratio, a 1-to-2 risk to reward ratio. You would have hit TP. At the end of the day, the one that won was the one that was not stingy with their stop loss. That is a good example of showing of what you can do based off of your stop loss. If you go ahead and put your stop loss too tight, sometimes you will see these moves right here that will take you out. So I'll be talking a little bit more about perfecting your entries, perfecting your stop loss a little bit more. But at the end of the day, what you really want to perfect is going to be your exit. Your stop loss, you can always leave it 2 to 3 pips above or below the final structure level. So in this case scenario, let's say, what would I have done, right? Let's say that we would have gone ahead and looked for a buying scenario. A lot of individuals would have gone ahead and done the following, which is going to be put their stop loss right here for a 3 pip stop loss. Guys, put it down over here. Put it down a little bit. And trust me, you will be a lot better off. Don't be stingy with your stop loss. At the end of the day, you want to make money. Okay? So perfect your exits. Don't worry so much on your entries. Let it go sometimes. Alright? With that being said, guys, I hope you guys enjoyed this quick lesson. Of course, I'm going to be talking a little bit more about strategies as far as your guys' stop loss, as far as your take profits, and overall how to go ahead and manage your account. But for now, this is it, and I'll see you guys next one. As always, like, comment, subscribe, and have a great one. Bye-bye.